Hello everyone, I hope you're all doing well. In today's lecture, I'm going to be going over invalidation levels. And when I say invalidation levels, I don't mean stop loss placement invalidation levels. I mean specifically to monitor order flow. Basically, what sort of invalidations we have to determine if we're in a buy program, if we're in a sell program, and which levels shouldn't be closed through in order for us to remain inside of that program. Basically, you can monitor order flow by looking at arrays, imbalances, gaps that price has shown an interest to prior. Once these gaps have been broken through, and we see that price has found support resistance inside of them, we see that it's clearly a point of interest for price. It's an area that price is likely going to react from if it does revisit. Now, there's two main types of invalidations that I utilize. They have separate functions, but they are equally as strong. The only thing is that one of them is easier to recognize and a bit more obvious in terms of what to look for. So starting off with the first one, I want to talk about specifically an imbalance signature. Now, what I mean by an imbalance signature is something like this. Here we have an imbalance, the first imbalance of this whole leg higher. Now, I talked about this before. The first imbalance that forms in the leg that takes out key liquidity, such as daily liquidity, session liquidity, in general, just the original consolidation of the move. These imbalances are key to monitor. And you can see how truly powerful they are, where you have this old imbalance, which is technically on the right side of the curve in this moment, but you will see gets utilized over here as the left side of the curve. Price goes into it, finds some support, breaks through, goes down, takes out the weekly low. Then, once it pushes above it again, look what happens. Price retraces into that imbalance, finds support, and is allowed to expand higher again. We basically see that price is respecting this area as price is already struggling. You can see right here in the morning around these candles, it's finding some support around this array. This is the little detail that we look for to make sure that this is going to be an important area to monitor. And you can see once it gets broken, price doesn't revisit it, and then price goes above, closes straight through. Price has to come down into that imbalance, and you can see reacts perfectly just before market close to allow for that final push. This is something you will see quite often, not just on the hourly, but also on the 1 minute. And these are specific algorithmic imbalances. And the reason we use them is because they have served a purpose. They originated from a key level. Because that initial imbalance, for example, why do you think we sometimes talk about the first imbalance after 9:30? Because this is a key delivery signature of this whole move. And you'll see that this happens all the time. The first imbalance of whatever the leg is, whether it's up, down, that one will get referenced by price again and again. And you can see it. It will repeat multiple times, such as here. First imbalance of this entire leg that moved down, took out this low right here, is significant. Price came back up, found resistance, was allowed to move lower again. And this can, of course, be used for targets at a later point in time as well. And we know that once this gets broken through, we monitor that for price to provide us with buying opportunities inside of that range now. Because we've broken above it, it should now function as support. So we wait for then retracements. And what we can do is we can basically look at that as an invalidation level. So if price was to break above it, then we don't want to see price close below it again, because that would signal that we're switching back to a sell program, because here we're in a buy program, as you can see. And this is key for us to understand how we can move and evolve our invalidation levels as price moves. Now, the second form of invalidation level is also an imbalance, but it's an imbalance where you can see that price has referenced it prior. It's proven to be a key point of interest for price. So you'll have something like this, where you see this imbalance, price closed, retraced into it, found resistance, went lower, came back inside, and it's consolidating inside of this imbalance. This is one of the strongest signs for an actual invalidation level, when you see prices struggling and deciding where to go next based on it. You can see we actually never closed back above. We simply just find resistance and it's allowed to go lower again. Come back on Monday, same thing, resistance, multiple times retest, and it's allowed to move lower. Now this one, you want to reference older imbalances that already formed on the left side of the curve, because of course you want to see the reactions. That's why this one, compared to the first imbalance that formed on the leg that took out liquidity, this one you will have to wait a bit more for, but you can also see, even in cases like this, where you have the first imbalance of the leg lower, before that leg lower takes out the liquidity, this is essentially the same invalidation as this one. Because you have that imbalance, price used it as resistance, went lower. Once again, resistance goes lower. So you can look at these small hints in price, try to recognize the key imbalances. If there's one array that you should look at, it's an imbalance. And that's because it's an area where price is yet to deliver efficiently. And we know that the algorithm is designed to specifically deliver price in an efficient way. So it has to go back, rebalance those imbalances in order for price to be allowed to move in the opposite direction. And let's say we're looking at right here. As you can see, this imbalance was not the first one of this leg lower, but price used it here. Found resistance, went lower, and then engineered liquidity right here with this previous day high. Price went lower to our other invalidation level, higher again, gap through, and you can see we slowly push through. And then once we close above, at this exact moment, because we could see this was an array of interest for price, we expect this now to provide support. So once it's been broken through, you can see price used it right here, went higher, came back down one more time, sweeping out the London low, went higher. So we can tell ourselves that this, as long as we do not close below this, that we can remain bullish, because this should now be a bullish point of interest. And you can see if we want to evolve this invalidation, we want to wait for the next invalidation level to be broken. So for example, right now, we can monitor this array because we've seen that price has used it multiple times. So preferably, we want to see price be able to close above this to further continue higher. And this will confirm to us that we're still bullish. And you'll see that this then becomes the next point of interest. You just wait for manipulation and you trade it higher towards the next target. And you can look for these signatures and these imbalances on the left side of the curve to not only know where price might struggle a bit to get through, so you can have targets based on that, but also to know once we've broken above specific levels that we anticipate them to be used as support. And if they don't get used as support, if we then close below again, and if they close, then we know we can switch bearish into a bearish sell program and we can trade that lower. The key thing here is to look at price and its areas of interest. It's not just about the arrays, it's about where they form. And it's about how price has utilized them in the past so that we can understand and anticipate essentially which areas are going to be used by price next. So as long as you keep an eye out on the hourly time frame and you find your invalidation levels, once you're able to master this and fully utilize these specific levels, you can be very confident in when you switch from being bullish to bearish, etc. Now, what you might notice as well is that this can also be applicable to opening gaps. So when you have an opening gap, we want to see price find support inside of that, use that to go higher. So once that's broken, before we had this level, so let's say this level was gone, right? We hadn't closed above this just yet. We want to see price find support inside of here. If it closes through this, we anticipate the next invalidation and lower draws on liquidity to be the next target. So opening gaps are also crucial to monitor. Another example right here, as you can see, if you want to see how precise this stuff can be. The first imbalance of the leg down took out liquidity into the opening gap. Look at how price is utilizing this tiny imbalance right here. Look at how many times price goes into it, struggles to get through. Once it's broken through, uses as support. Goes all the way up. Same thing here. Once broken through, uses as support. This is such a powerful way of looking at invalidations and points of interest that if you look into this, you're going to see this stuff repeat. And it's almost to the tick because this is an algorithmic signature because it's price spooling, right? This is Manipulation, distribution. You have to understand the start of a manipulation leg or distribution leg, they always start at a specific area. They start at a specific point in time and at a specific area. And that's why those imbalances are important, because that's the first signature. That's the starting point for that run. And you have to think, if we have gone from the starting point down to the end point, we get back above the starting point, we expect that to now hold, because it's about where price is forming these specific signatures and what times as well. And then you'll start to see some crazy precision based on this. And you can, of course, use that for your points of interest, your invalidations, as we spoke about here, to determine whether you're in buy program, sell program. So I hope you enjoyed this lecture and that you got something out of it. Highly suggest that you look into specifically why I chose the imbalances that I did. With that being said, I hope you enjoyed. I'll see you in the next one.